Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and I'm speaking today with Jordan Roy-Byrne, founder and publisher of The Daily Gold. Jordan, it's always great getting you on the show, getting your thoughts on the precious metals, and to the ire of many gold bugs and people that follow the precious metal sector, after making almost a new all-time high, making a all-time high on the COMEX, but not taking out the all-time high last week, gold has given up about $170 and gone back down to a key support level you had outlined in a recent video around 1908. So, coming out of the gates, I'd like to get your thoughts on gold. What do you make of this recent pullback we're seeing?
Well, the pullback has been more than I anticipated. I was thinking gold would come down to 1920 probably. I was thinking 1920, 1950. Those were the key support levels. So I have been a little too optimistic. 1908, of course, is the top of that open gap, and we had that breakaway gap. And so I am a little surprised that we've come all the way back down to that point. Maybe we'll fill the gap. I don't think it's that significant. It'd be a little short-term disappointing, but gold has significant support, around 1900s. Obviously, it's come down to 1908, 1907 twice. Maybe it comes down a little bit more, but I think we're going to see a low probably this week, or, once we get into next week, we will have seen a low and a bounce. And I think this is going to develop into probably some kind of a triangle or some kind of bullish consolidation. It's a little early to forecast that, but I think after a month or two, it should be clear that this is developing into a bullish consolidation. And I think, I know we'll get to the stocks, but I think the stocks have been acting better than gold. And boy, it's been a really long time since we've seen that during a correction. So that to me is really encouraging. So I don't know, maybe I'm being a little bit too optimistic here, but I think we're going to rebound pretty soon.
Well, that's an encouraging thought, and I read your article earlier in the week that was titled to your subscribers, Gold has done this only twice, and you were talking about as gold is reaching or approaching a previous all-time high to have it correct like this. I'd love you to unpack that concept for our audience.
Okay, so we're looking at times when gold has not just made a new all-time high, but it after a correction, it rallied back to the new all-time high and then corrected at that point. So that correction is where we are now. And that happened in 1978. We had the 75 to 76 brutal bear market, then gold climbed all the way back. I think it got up to 191 and the old high was 195. So at that point it had a pullback. And then most recently you have 2009 when of course 2008, gold hit $1,000 and we had the GFC. And so gold came down intraday to below 700. Then in 4 months, it climbed back to 1,000 in February '09. Then it had a bullish consolidation there for 4 months. And each time the correction was about 12, 13%. If gold were to correct 12 or 13% this time, I think that would take it into the mid 1800s. So I think that's a little bit much. But if you look at the rebounds that gold had coming into retesting the previous all-time high, those moves were far bigger than the one we just had. I mean, if we're looking at gold over the last 6 months, I mean, it only rallied like 20%. I mean, if you look at the moves it had in 1978 and 2009, coming up to those highs is far bigger. So it made sense there would be more of a correction. And so I think I said if gold gets down to 1908, that's about an 8% correction. So, maybe it comes a little bit more. Maybe it tests 1900 or even comes down to 1890 something. But, that aside, if we're looking at how the market performed in those two previous cases, when the correction ended and the next move started. I don't have the figures handy, but I mean, I think we're talking about roughly like a 40% move in the next 5 or 6 months. I think that explains what happened in those two instances. So we're just in a very, very bullish situation. Potentially, obviously, we can't predict the future, but I really like how things are lining up, especially if I'm right and that this correction ends and we develop some kind of a bullish consolidation. Again, I think it could be a triangle. It's probably going to take at least a couple more months, but I mean, this is a really bullish setup. I mean, when we come out of this and gold is able to get back to the high and then break through 2100, I mean, we're at potentially one of the most bullish points like we're ever going to see as far as technically. I mean, coming back to an all-time high and then you're correcting and consolidating before breaking it. I mean, we're just setting up for, in my opinion, a real explosive move to the upside. But, first, we're in the period where we're going to have to correct for at least a few months.
Well, speaking of the correction for a few months, it doesn't have to be a terrible drawdown. It can be kind of a sideways grind where it corrects in time as well as in price. But you had outlined, in addition to the larger cup and handle pattern that's playing out, which is extremely bullish, there's also a smaller cup and handle actually in the handle of the larger pattern. So if people can imagine a larger cup and handle and then coming down and out of that handle, it forming even a smaller cup and handle pattern, could that corrective move for the next few months be the handle of that smaller mini cup and handle?
Exactly. I mean, that's what I think it exactly is going to be. Because if you look at let's say a 2-year chart, you can see a clear cup is formed. And so a consolidation is going to look like a handle on a cup and handle pattern, which of course itself makes up the handle of a much larger cup and handle pattern. So I know that's probably confusing for the listeners. But, this smaller cup and handle pattern, if and when gold makes that breakout move, I mean, it has a measured upside target of pretty close to 2,500. So it's pretty significant. Of course, the much larger one has a measured upside target of 3,000, and then the log target comes in at about 3,700 to 4,150 or so, depending on how you measure it. So yeah, there's a lot of bullish patterns at play here, but just circling back, yeah, this, if you're looking over the last 18, 19 months, yeah, that is a cup, and this consolidation is going to look like a handle. And it's just a really bullish setup, both kind of in the medium term, but also in the long term.
And it's interesting the timing of it because literally today the Fed is meeting and discussing the kicking off of their first rate hiking cycle. So it could be that while we didn't see the corrective move, and we saw a little bit of it, I guess, before the FOMC meeting, but it could be that this, couple month corrective pattern is just the initial part of the rate hiking cycle. And then as things progress and as they maybe put one or two hikes on the board, maybe that's where gold starts getting the impetus to actually start breaking out again. What do you think of that idea that after we've gotten maybe one or two hikes in, that maybe that's when people start wondering how long can they go with this, and that's where gold gets the energy to break out?
Yeah, I completely agree. It makes a lot of sense. I mean, historically looking back, we're probably going to see, yeah, well, gold made a peak when they started hiking, but that lines up really nicely, I think, that we'll see. I mean, the yield curve, I think, got down to 20 bips. I think it's a little higher now, and we have seen yields rebound, but the yield curve is still, that's going to be a real problem. And yeah, I mean, it's possible gold could, maybe it consolidates and corrects for a few more months than we're thinking. If the Fed can get in more than one or two hikes, I mean, that's possible. But I completely agree. I think that's how it's setting up, is that when the Fed has to stop, which will coincide with real concern about growth picking up, that's when you're going to see gold start to move towards that breakout. So I completely agree with you.
Okay, well let's pivot from gold over to silver. I know that just in chatting with you before we started recording, you're not as encouraged on silver. You think gold has the higher ground here, but what's your outlook on silver?
Yeah, I'm a little disappointed that I thought silver, if you would have told me gold is going to rally and, become pretty close to its previous all-time high, I would have thought silver could get to 28, 29. But I mean, that was my thinking, is that silver, months and months ago, my thinking was, gold needs to break 2100 for silver to break 30. So I guess I'm being picky. I would have liked to see silver peak maybe $1 or so higher than it did. But again, that's a little picky. So silver, I think that's the reality, is that silver is going to follow gold, and then eventually, judging from history, When gold makes that breakout move and surges above 2100, then at some point, that's when silver will start to outperform gold. But the larger setup is more beneficial for gold because gold has limited resistance. It only has the all-time high, and that's pretty low. It only hit that once. Whereas silver has to chew through, the 28 to 30 resistance and then the, $50 resistance, which it's already hit twice. Now, if you're looking at, I think, at a quarterly or a monthly chart, 35 to 37 is pretty significant. So silver has more resistance to chew through than gold. So I'm more comfortable, with gold technically. It just has a cleaner setup. But with that being said, if we're thinking ahead, gold's going to break above 2100 at some point this year. My guess would be, after that break happens, from that point moving forward, that's when you'll see silver start to outperform gold. But that doesn't mean that silver is not going to rise with gold, when we come out of this correction. I just, as I've already said, I think it'll take a little while before silver really outperforms gold. So I'm still bullish on both, but I'm more comfortable with gold and its technical setup, I guess, at where we are here and now and coming out of the correction from an immediate standpoint. Short term, I mean, looking at silver, I mean, there is some moving average support right around 24. Yeah, I mean, it's a little messy in the short term, but I'm not dissuaded. I think, gold probably needs to get up to 2100, I think, for silver to get back to 28 or 29. But, it'll perform fine once this correction ends.
Yeah, gold is generally the prime mover and it tends to lead anyways. And then when silver does play catch up, it's usually more of a laggard, but then it usually puts on its afterburners and catches up and has a big percentage move later in the cycle. So we can look forward to that maybe once that 2100 level is breached. Well, let's move over to the mining stocks because I guess one thing that's been encouraging for precious metals investors, despite the fall in gold and to some degree, a small fall in silver as well, the stocks have held up pretty good. I mean, whether it's GDX, GDXJ, SIL, SILJ, they've all actually held their ground a little better than one would have expected. Sure, there's a little bit of pressure, but overall, the bigger miners, like what you would find in GDX, have actually held on to their gains pretty good. What do you make of the mining stocks, Jordan?
I think what we've seen so far is really encouraging. I mean, simply put, gold has already come down to the top of that gap at 1908. And when we're looking at GDX, for example, the top of that big open gap is, I want to say it's right above 3450. If you look at the low that GDX, well, first of all, I mean, as we're talking, or when we started talking, gold was basically down around 1908, 1909. So gold is down at the bottom of that gap. I mean, GDX, where it is now, 3656, GDX is 2 points above that gap, which I don't know, maybe that's 6% or so. So there's that. GDXJ is pretty similar. If we're looking at GDXJ, the top of that gap comes in just below 4350. So GDXJ is about 2 points above that, above the top of the gap. So we have those two things which are really encouraging. But if we're just looking at the daily candles since this correction began, and we're assessing, okay, well, this is a bullish candle or not bullish, there's only been one candle since GDX peaked that you would say this is a bearish candle. The other ones have been bullish to a good degree. That was, Monday. That's been the only bearish candle. But even on Monday, GDX closed off the low of the day. So now if we're looking at GDXJ, same thing, except, there's one candle that was bullish for GDX. I mean, last Friday's, it was more bullish for GDX and GDXJ. But, looking at GDXJ and the daily candles, again, Monday is the only one that's really bearish. The other ones you could say are bullish. So, based on all these assessments, the miners are really holding up better. And boy, when's the last time you could say that in a correction? I mean, I'm just thinking to myself, maybe in 2016, perhaps, or one point in 2020, early when we're coming off the bottom. So, I mean, that's a really good sign, the way the miners are holding up. And I mean, just outperforming gold during this correction, in my opinion. They're way above that gap support that gold is already at. And if you're looking at the daily candles, like they're pretty encouraging. They show far more accumulation and buying than distribution. So I mean, and that portends to gold probably hitting a low here really soon if it already hasn't.
Yeah, it's been a while, Jordan, since we've seen that kind of strength in the mining stocks, and I guess we'll wrap it up there on that encouraging note. But we'll keep our eyes peeled for where the support holds for gold. We'll wait to see if these mining stocks hold up as well as they have thus far. And looking forward to chatting again next week once we see what the after effects of the Fed meeting are today and once the market's digested it. So, looking forward to chatting again next week. Thanks for all your time, Jordan. If people like Jordan's thoughts, definitely check out the link below this audio to go check out the Daily Gold.